You're watching the latest financial news with VEVOFX. It's Thursday, the 18th of January 2024. So, under the cover of night last Tuesday, Houthi rebels unleashed a formidable barrage of missiles and drones, marking one of the most significant assaults on the bustling commercial routes of the Red Sea. And in swift retaliation, a formidable alliance of 5 US and UK warships diligently safeguarding this pivotal region for global trade sprang into action. Well, the defence resulted in the interception and destruction of 18 drones, along with thwarting 2 anti-ship cruise missiles and a solitary anti-ship ballistic missile, as confirmed by US Central Command. Well, this Monday, Iran's Revolutionary Guards initiated a provocative move by launching ballistic missiles targeting a purported Mossad spy base in northern Iraq and what they described as anti-Iran terror groups in Syria. So, this latest surge in hostilities is now heightening the risk of a broader regional conflict. The United States swiftly condemned the missile strikes, branding them as reckless and lacking precision. Iranian forces claimed that their midnight assault in Iraq obliterated a key espionage hub of Israel in Erbil, the capital of the semi-autonomous Kurdistan region. The attack was framed as a response to alleged Israeli operations that resulted in the deaths of Iranian Revolutionary Guard commanders and members of the Iranian resistance fronts. So the situation now stands precariously on a precipice, with tensions escalating and, of course, the spectre of a wider regional conflict looming rather ominously. Well, these tensions in the Middle East seem like the start of major confrontations among hostile countries that could transcend into something more sinister, especially for the United States and Europe. And of course, speaking of Europe, Switzerland has agreed to host a global peace summit on Ukraine at the request of Ukrainian President Volodymyr Zelensky. Well, Switzerland, that neutral country known for mediating conflicts, may play a crucial role in resolving the war that began with Russia's invasion on the 24th of February back in 2022. While specific details about the summit are yet to be finalised, Zelensky expressed openness to all nations respecting Ukraine's sovereignty and territorial integrity. All these events imply that the dollar has regained strength against its European counterparts. The dollar was trading lower from early November to January, and the talk of a bearish run was high on the horizon. However, since last Thursday, market sentiments have changed drastically. So in the aftermath of the attacks, oil prices have experienced a significant surge, no surprise there, with Brent crude rising approximately 7% since early December when Houthi rebels initiated their attacks on ships in the Red Sea. Recent reports aligning with the military actions taken by the UK and US indicate that the British government is considering various scenarios. If the Red Sea crisis persists, there is a potential for oil prices to increase by $10 at least per barrel, while gas prices could see a substantial rise of up to 25%. So the dollar index, ever resilient, boasted gains, closing at $103.21, bolstered by the robust employment data unveiled on 2 Fridays before and CPI reports last Thursday. Though the possibility of another rate hike looks unlikely, as the Fed is expected by most economic analysts to cut interest rates. And so, of course, the dollar index is tipped to regain its last year's high of $107. And over in the Asian markets, the Australian dollar and New Zealand dollar have found themselves trading lower after the major events and attacks, and the sentiments remain until huge moves by the Fed may create a market reversal or retracement. And against the US dollar, the Australian dollar fell by 0.43%, down to 66.32, and the New Zealand dollar declined by 0.39% to 0.6176. And on Tuesday, the dollar maintained its strength as investors evaluated the potential for early and substantial interest rate cuts by the Fed. Well, this assessment occurred ahead of a data-filled week that could shape the monetary policy outlook for major central banks. And again, against the dollar, the yen saw a slight weakening, reaching 145.89 against the dollar, prompted by data revealing that Japan's wholesale inflation remained flat in December compared to the previous year, marking the 12th consecutive month of slowing. And the dollar's dominance has cast a shadow over most major currencies, causing the euro, for example, to decline by 0.28% to $1.0917, representing its most significant one-day percentage drop in 2 weeks. The euro has experienced a 1% decline over the month. And here in the UK, sterling fell to $1.2687. That's down 0.3% in a day, stepping back from its early nearly 5-month high of $1.2825 against the dollar achieved in late December. Meanwhile, traders are now focusing on this week's jobs and inflation data to refine their interest rate models. So that is it. Do let us know your thoughts in the comments below, and if you would like to keep up with the latest Forex news, don't forget to click on that subscribe button. Why not give us a like whilst you're at it? But in the meantime, thanks for watching, and we'll see you next time. This has been the Quick News brought to you by VEVOFX.